Welcome back to Boni's Life, where we decode the financial world one insight at a time. I'm Boni, and today we're diving into one of the most fascinating economic phenomena of our time, the dramatic global divide in cryptocurrency adoption. Picture this. While India celebrates over 100 million crypto users leading the world in adoption just across the border, China has banned cryptocurrency entirely. Meanwhile, Nigeria's youth are using Bitcoin to escape inflation, while Germany's citizens remain skeptical with only 6% adoption rates. What's driving these massive differences? And more importantly, what does this tell us about the future of money itself? Today, we're going to explore the highest and lowest crypto adoption rates by country and continent, backed by data from Chainalysis, TRM Labs, and insights from the world's leading traders, developers, regulators, and economists. Trust me, the patterns we uncover will surprise you. Let's start with the big picture. According to the latest 2024 Global Crypto Adoption Index by Chainalysis, we're witnessing something unprecedented. Global cryptocurrency adoption has not just recovered from the 2022 bear market, it's actually surpassed the peak levels we saw during the 2021 bull run. We're talking about over 560 million crypto users worldwide, representing 6.8% of the global population. But here's where it gets interesting. And this is where my economist brain starts getting excited. The adoption isn't happening where you might expect. The traditional financial powerhouses aren't leading this revolution. Instead, it's emerging markets that are driving the charge. And the reasons are both fascinating and revealing about the fundamental value proposition of cryptocurrency. The data shows us something remarkable. 7 of the top 20 crypto adopting countries come from the Central and Southern Asia and Oceania region. This isn't coincidence. It's economics in action. As Michael Saylor, the Bitcoin evangelist and MicroStrategy founder, recently noted, Bitcoin adoption accelerates where traditional financial systems fail to serve the people. And the data backs this up beautifully. Let's dive into our adoption champions, and I promise you the stories behind these numbers are more compelling than any Netflix series. India takes the crown, and deservedly so. With an estimated 100 million crypto users, India isn't just leading in raw numbers, they're dominating across every metric. They rank number 1 in centralized exchange usage, number 1 in retail transactions, and sit comfortably in the top 3 for DeFi activity. But here's what makes India's story particularly fascinating. This happened despite, or perhaps because of, the government imposing a punitive 30% tax on crypto gains with no deductions allowed. As Nishal Shetty, founder of Wazirxis, one of India's largest crypto exchanges, puts it, Indians have embraced crypto not as speculation, but as financial inclusion. For millions, it's their first real access to global financial markets. The numbers support this. India's crypto adoption is driven primarily by retail users, ordinary people making transactions under $10,000. This isn't wealthy elites playing with digital assets. This is grassroots financial revolution. Nigeria claims second place, and their story is even more compelling. With 27% of the population owning cryptocurrency, Nigeria has the highest per capita adoption rate in Africa. But why? The answer lies in their economic reality. With inflation rates often exceeding 20% and a naira that's lost over 70% of its value against the dollar in recent years, Nigerians have turned to Bitcoin and stablecoins as a store of value. Temi Masela Awogboro, a prominent Nigerian crypto trader and educator, explains it perfectly. For us, crypto isn't about getting rich quick. It's about preserving what we've already earned. When your local currency loses value faster than you can save it, Bitcoin becomes your financial lifeline. Indonesia rounds out the top 3, leading the world in DeFi adoption. This is particularly interesting because it shows how different regions are using crypto for different purposes. While India focuses on centralized exchanges and Nigeria on value preservation, Indonesia is pioneering decentralized finance applications. The pattern continues with Vietnam at number 5 and the Philippines at number 8. Notice something? These are all emerging economies with young tech-savvy populations and, crucially, economic challenges that traditional finance struggles to address. Now, here's where it gets really interesting. The United States sits at the number 4. Despite being the world's largest economy, America isn't dominating crypto adoption. Why? As Christine Lagarde, president of the European Central Bank, recently observed, in developed economies with stable currencies and robust banking systems, cryptocurrency adoption follows different patterns. It's more about investment and innovation than a necessity. When we zoom out to Continental analysis, the patterns become even clearer, and frankly, they're reshaping how we think about global finance. Asia leads the charge, and it's not even close. The Central and Southern Asia and Oceania region dominates with 7 countries in the top 20. But this isn't just about raw numbers. It's about how crypto is being integrated into daily economic life. From India's UPI crypto bridges to Indonesia's DFI innovations, Asia is writing the playbook for crypto integration. Africa is the surprise powerhouse, with Nigeria leading and Kenya showing the fastest growth rate globally. Doubling their crypto transaction volume in 2024, Africa is proving that necessity drives innovation. As Alakanani Itireleng, a Botswana-based blockchain developer and advocate, notes, Africa isn't adopting crypto despite our challenges. We're adopting it because of them. Crypto solves real problems here. Latin America shows remarkable consistency with Brazil, Venezuela, Mexico, and Argentina, all in the top 20. This regional clustering isn't coincidental. It reflects shared economic challenges, including currency instability, inflation, and limited access to traditional banking. Europe and North America lag behind, and this is where the story gets nuanced. It's not that these regions lack the technology or knowledge. They have robust traditional financial systems that for most citizens work reasonably well. As Vitalik Buterin, Ethereum's co-founder, recently observed, crypto adoption correlates inversely with traditional financial system effectiveness. Where banks work well, crypto grows slowly. Where they don't, crypto explodes. Now let's talk about the other side of the coin. The countries with the lowest adoption rates and outright bans. This is where the story gets politically and economically fascinating. China leads the ban brigade, and their story is particularly ironic. The country that once dominated Bitcoin mining and was home to some of the world's largest crypto exchanges completely banned all cryptocurrency transactions in September 2021. The People's Bank of China cited concerns about financial stability, energy consumption, and money laundering. But here's the twist that would make any economist chuckle. Despite the ban, China still ranks 20th globally in crypto adoption according to Chainalysis data. How is this possible? VPNs, peer-to-peer trading, and the simple reality that when people want financial freedom, they find a way. The complete ban club includes Bangladesh, Tunisia, Egypt, Morocco, Iraq, Oman, Qatar, Algeria, Afghanistan, Nepal, and Bolivia. Notice a pattern, but many of these countries have either authoritarian governments, struggling economies, or both. As Andreas Antonopoulos, a leading Bitcoin educator and author, puts it, governments ban Bitcoin, not because it's dangerous to their people, but because it's dangerous to their control. The high tax discouragers present a different strategy. Countries like the Netherlands, 36% tax on unrealized gains, Japan, up to 55% total tax rate, and India, 30% with no deductions, haven't banned crypto. They've just made it financially painful. This creates what I call the regulatory arbitrage effect. Capital and talent flow to crypto-friendly jurisdictions. Singapore, Switzerland, and the UAE have become crypto hubs not just because of their technology infrastructure, but because of their regulatory clarity and reasonable tax treatment. Let's hear from the experts who are shaping this space, because their insights reveal the deeper currents driving adoption patterns. From the trading perspective, Michael Saylor, whose company MicroStrategy holds over $15 billion in Bitcoin, recently stated, "We're witnessing the greatest monetary revolution in human history. Countries that embrace this early will have significant economic advantages. Those that resist will find themselves left behind." From the development side, Ethereum's Vitalik Buterin offers a more nuanced view. Crypto adoption isn't just about replacing traditional finance. It's about expanding financial possibilities. In developed countries, we're building new financial infrastructure. In developing countries, we're often building the first real financial infrastructure many people have ever accessed. From the regulatory perspective, the divide is stark. While Christine Lagarde of the ECB maintains that cryptocurrencies are worth nothing and should be heavily regulated, other central bankers are taking different approaches. The Bank of England's Andrew Bailey recently noted, "We cannot ignore the reality of crypto adoption. Our role is to ensure it develops safely, not to prevent it entirely." From the economic analysis, Nobel Prize-winning economist Paul Krugman, long a crypto skeptic, recently admitted, "While I remain concerned about crypto's volatility and environmental impact, I can no longer deny its utility in countries with unstable currencies or limited banking access. The data is simply too compelling." From the institutional side, BlackRock's Larry Fink, whose company now manages Bitcoin ETFs, represents the institutional shift. We've moved from asking if institutions will adopt crypto to how quickly they can do so responsibly. The demand from our clients is undeniable. Now, let's get to the meat of the analysis. Why do we see such dramatic differences in adoption rates? As someone who's spent years studying economic behavior, I find these patterns absolutely fascinating. Economic necessity versus economic luxury. In countries like Nigeria, Venezuela, and Argentina, crypto adoption is driven by necessity. When your local currency is losing value rapidly, when banks are unreliable, when sending money abroad costs 10 to 15% in fees, crypto becomes a lifeline. In contrast, in countries like Germany or Japan, crypto is more of an investment choice or technological curiosity. Regulatory clarity versus uncertainty. Countries with clear, reasonable regulations see higher adoption. Singapore's comprehensive crypto framework has made it a regional hub. Conversely, regulatory uncertainty in places like the United States has slowed institutional adoption, though retail adoption remains strong. Financial infrastructure quality, this is the big one. Countries with excellent traditional banking systems see slower crypto adoption. Why use Bitcoin when your bank transfers are instant, cheap, and reliable? But in countries where banking is expensive, slow, or inaccessible, crypto fills a crucial gap. Demographic factors. Younger populations adopt crypto faster. Countries with median ages under 30 consistently show higher adoption rates. This isn't just about tech savviness, it's about being less invested in traditional financial systems. Government trust levels. Countries with high government trust tend to have lower crypto adoption. When citizens trust their government and central bank, they are less likely to seek financial alternatives. When trust is low, crypto adoption soars. Let's zoom out and look at the continental patterns, because they reveal some fascinating economic and social trends. Asia. The innovation laboratory. Asia's dominance isn't just about adoption rates, it's about innovation. From China's digital yuan experiments, despite the crypto ban, to India's UPI integration possibilities to Singapore's regulatory sandbox, Asia is where crypto's future is being written. The region combines technological capability with economic necessity in ways that drive real innovation. Africa. The leapfrog continent. Africa is doing with crypto what it did with mobile phones, skipping traditional infrastructure entirely. Countries like Kenya and Nigeria are building crypto-native financial systems rather than trying to integrate crypto into existing banking. This leapfrog approach could give Africa significant advantages in the digital economy. Latin America, the inflation hedge. Latin America's crypto adoption is primarily driven by monetary instability. From Argentina's peso devaluations to Venezuela's hyperinflation, the region has learned that local currencies can't always be trusted. Crypto provides a hedge that traditional assets can't match. Europe, the regulatory battleground. Europe presents the most complex picture. While the EU works on comprehensive crypto regulation, individual countries are taking different approaches. This regulatory fragmentation is creating winners and losers within the continent. North America, the institutional awakening. The US and Canada are seeing crypto adoption driven more by institutional investment than retail necessity. The approval of Bitcoin ETFs, corporate treasury adoption, and growing institutional infrastructure are the primary drivers here. So what does all this mean for the future? Based on current trends and expert analysis, I see several key implications that could reshape global finance. The Great Rebalancing. Countries that embrace crypto early and thoughtfully will likely gain economic advantages. They'll attract crypto businesses, talent, and capital. We're already seeing this with Singapore, Switzerland, and the UAE becoming crypto hubs. Financial inclusion. Revolution. Crypto is providing financial services to the unbanked and underbanked at a scale traditional finance never achieved. This could accelerate economic development in emerging markets. Monetary sovereignty. Questions. As crypto adoption grows, central banks will face new challenges. How do you conduct monetary policy when significant portions of your economy use alternative currencies? Regulatory convergence. Eventually, we'll likely see international coordination on crypto regulation. The current patchwork is unsustainable as crypto becomes more mainstream. Infrastructure evolution. Countries will need to decide whether to build crypto-friendly infrastructure or risk being left behind in the digital economy transition. Here's the fascinating paradox we've uncovered today. The countries that need crypto most are adopting it fastest, while the countries with the most resources to develop it are moving more slowly. This creates both opportunities and risks. For investors and traders, this means looking beyond traditional economic powerhouses to find the real crypto innovation. For policymakers, it means balancing innovation with stability. For all of us, it means we're witnessing a fundamental shift in how money works globally. The crypto adoption map isn't just about technology. It's a reflection of economic inequality, government trust, financial infrastructure quality, and human ingenuity in the face of challenges. As we've seen today, crypto adoption isn't just about the technology. It's about solving real human problems, whether that's preserving wealth in Nigeria, accessing financial services in India, or building new economic infrastructure in Indonesia, crypto is proving its value where it's needed most. That's our deep dive into global crypto adoption. What do you think? Are you surprised by any of these patterns? Let me know in the comments below, and don't forget to subscribe for more insights into the evolving world of finance and technology. Until next time, this is Boni, reminding you to stay curious, stay informed, and keep building your financial future.